And earnings continue to move markets from big tech to the beauty sector. We'll be covering it all and delivering the insight you need to know as trading gets underway. That's where we begin today's shows as investors prepare for another busy session. Joining me now to break it all down is Jay Woods. He's the Chief Market Strategist for Freedom Capital Markets. Jay, welcome.
Hey, good to be here.
All right, so earnings season is in full swing. Alphabet reported after the bell yesterday. What were your takeaways?
Yeah, the takeaways are, they continue to hit on all cylinders. The CapEx spend was more than people anticipated. After hours, the stock was very volatile. It'll be very interesting to see how it trades today, right now down in the pre-market. And that follows a trend we're seeing a lot in the tech sector. Stocks that report pretty solid beats, good earnings that are going down. And that is a concerning trend because, for all intents and purposes, Alphabet has been doing extremely well. And that trend should have continued higher. But this good news wasn't enough, at least initially, to lift shares.
All right, another Mag 7 giant, Amazon, is reporting this afternoon. What are you going to be listening for?
Yeah, Amazon, it's all about Amazon Web Services and that spend. Listen for also advertising revenue. Maybe the Melania movie results will help boost being a little... Anyway, we'll see. Amazon, what we're worried about from a technician, I'm worried about that 240 level. We get there, we don't stay above it. We don't see the follow through. Amazon Web Services has been showing positive numbers. The cloud has been great to them, but will it matter? What we continue to see is that trend of beat, but trade lower. The difference with Amazon and some of these other stocks, it hasn't had that run up where it can come down. It's been really trending sideways for a better part of a year now. So maybe this is the stock in that Mag 7, besides Apple, to lift after earnings. We shall see. So I'm more concerned about price action because Amazon historically beats. The CapEx spend will be under the microscope, but last quarter they did very well, and I expect them to continue on that path to just another double beat.
All right, by the end of today, 6 of the 7 Mag companies will have reported. NVIDIA, of course, will report later this month. What did their reports tell you about the future of AI and tech?
Yeah, it's important, but what we're seeing is a bifurcation. We're seeing the technicals take hold over the fundamentals. There's that disconnect where even though we're seeing all this AI spend, now there's this new fear. And we're seeing, some of these stocks crater. The software ETF, the IGV, is down 30% from its high. That has Palantir, Microsoft, Oracle, Adobe, some of the cyber names. They're all doing well fundamentally, but the concern is, will AI eat AI? Meaning, okay, it has gotten so good that other AI platforms can copy some of the things that CrowdStrike has done, and as a result, they're going to lose market share. So there's this fear, and it's starting to become a little overdone, a little irrational. So I think the investors that have been waiting on the sidelines for an opportunity to enter some of these software names, they can look at the individual stocks within that software sector or buy the basket in the IGV, which has been tremendously oversold and giving people an opportunity to buy it on a dip.
All right, and what are some of the biggest themes coming out of earnings season so far for you?
Well, the theme is rotation. What are we seeing in this market? We're seeing sectors that have been beaten down, that have lagged during this nice bull run we've had since 2023, start to pick up momentum. Coke and Pepsi making new highs. Walmart, consumer staples, all doing well. The consumer staples as a whole, Kraft Heinz, new highs, or breaking out, not new highs just yet. Hershey's new highs. They were here yesterday. Earnings out today. So Hershey's, these are stocks that you don't want to see lead. You want to see them participate when the market's doing well. But right now, the leadership in this market is what I consider late bull cycle leadership, or at least as we rotate, not the ones that are going to take us much higher. So when you have those magnificent names, and we focus on them for a reason, they're the highest weighted stocks in the indexes. When they are taking legs back, that's bad, because the overall breadth of this market has been very positive. We've had more winners than losers the last 3 days, but if you look at the major indexes, they've been trending lower, and technology's been the lag and the downdraft on the indexes. But overall, the market's holding in there, but we're not getting that big lift because the leadership doesn't have enough of a weighting to lift us higher.
And while we're not going to get a January jobs report this week, we did receive some jobless claims data. What does it tell you about the state of the economy?
Yeah, the jobless claims data was a little wonky. The ADP is more of a survey than actual hard data. The good news is that jobs report that was supposed to come out tomorrow, Friday, is just being pushed back to next Wednesday. So that comes out with the CPI. And the CPI and the jobs data are the two most important pieces of data. Together, we'll form the PCE. But that, to me, next Wednesday will be very interesting. Unemployment, jobs, 4.4% on the unemployment rate. And then the CPI, that has peaked at 3% and it's starting to tick lower. So if we can get good numbers, good results there, I think that would be a good tailwind as we go into the next Fed meeting, the penultimate Fed meeting for Jerome Powell, as he has 2 left. And then we'll get into the whole, Kevin Warsh and the hearings and the drama there. But yeah, that data Wednesday will be a very important day for the market.
And the New York Stock Exchange has a double IPO today, Bob's Discount Furniture and Forgent. How do investors typically gauge multiple new listings simultaneously?
As someone that's been down here for so long, I love when we have multiple IPOs in one day. That means the market is ripe for companies to actually go public. And we are at all-time highs or just off of them. And we're focused on the tech sector. But these 2 companies going public today, they're coming at a time where conditions are ripe for them. Bob's, outside the New York Stock Exchange, has this great setup. They have this bed and this furniture set that if it was warmer, I would have, hung out there for a little while. But it is exciting. Bob's ringing the opening bell today. They both priced well. So we'll see how retail, welcomes them here when they open a couple hours after the trading day begins. But anytime we have 1 IPO, it's exciting. 2 IPOs, ridiculously exciting. So there is a buzz on the floor today, and it's always fun to be in the room when there is that buzz.
All right. Thank you, Jay Woods, Chief Market Strategist for Freedom Capital Markets.
Thank you.